Hi, everyone. This is Jason Burek of Wall Street Trading Street.
And Lee Justo from Risk.
Welcome back to another episode of Finance Unspun. This is episode number 6. Now, Lee, I want to talk about a lot of the different current events. I think we have 6 main topics here. The main topics right now, Q2 conference calls, earnings calls are coming out for a lot of the large and medium-sized U.S. companies. We're getting a lot of information on the U.S. consumer. The consumer price index said it was 9.1% inflation. What the companies are saying, though, on these conference calls, it's way, way worse than that with the consumer spending, their budgets, and discretionary income.
Are you surprised that the CPI is inaccurate there, Jason?
You mean the CPI or changing propaganda index?
Exactly. So, I mean...
Multiply by about 2, right? According to Shadow Stats.
Exactly. So Walmart came out and, they basically, because of price cuts and oversupply, they're hurting. Their profits are going to be in the tank.
The other important information, so these companies do have higher costs, they have higher energy costs, they have higher labor costs. Now, eventually those will get passed on to the consumer. But the information we're getting on guidance from these companies, whether it's Walmart or Target, yes, they had higher inventory last quarter. That inventory is eventually going to be sold on sale. They're going to discount it. They're going to get cash. They're not going to order as much inventory. If they do order more inventory, the costs are going to be higher. They're going to be passed on to the consumer. So there might be bargains or discounts or sales for some of these consumer discretionary items, these big ticket items. But what we're hearing, though, on the conference calls, whether it's the big box stores or the grocery stores, is that the consumer is strapped in terms of their budget, their monthly budget, in terms of their monthly income, their discretionary budget, savings, discretionary income. The average consumer, so middle class, even upper middle class, because the Wall Street Journal in the last week or so, they ran an extensive story about how even if you're upper middle class, and they were citing a bunch of people in the story, that now that the asset price inflation is gone, all that easy asset price inflation for people trading stocks and flipping real estate and all these other easy profits that the upper middle class or affluent were getting from the Cantillon effect and asset price inflation, that the asset price inflation is gone. Even the upper middle class is having income problems now with the reverse, what I call the reverse wealth effect, where asset prices could potentially either be stagnant, go sideways, or fall, and then rising consumer prices. The information from the conference calls, is that the consumer is focused solely on the staples, solely on the necessities. So for listeners out there, if you're not familiar, most people's budgets, if you're poor or working class, middle class, lower middle class, small business owner, most of your monthly income is going to go towards basic necessities like rent, mortgage payments, diesel, gasoline, electricity, food, healthcare. Those are most of the basics. And that takes up, I think, 65-70% of most people's budgets. And then the rest is either consumer discretionary items, vacations, or saving.
I think most people are feeling some sort of squeeze, no matter what economic tier you're at. If you drive, you're obviously going up to the pump and just kind of getting sticker shock when you fill up your tank. There's actually a funny article that I just saw today where Duane Reade, which is a large drugstore chain in New York City, but they pretty much sell a lot of other things. They're locking up cans of Spam now. $3.99 can of Spam. I guess they're getting stolen. So I think people are feeling the pinch. They're starting to look for alternative, somewhat illicit means to get what they need.
And I've seen pictures and video of some of these grocery stores and also drugstores in New York City and other major metro areas. They have not just Spam locked up, Lee. They have everything locked up. It's almost everything is under glass or lock and key now. Or anti-theft devices. I mean, I've seen in Florida, they had stakes in the grocery store. They had stakes with anti-theft devices at grocery stores and at the Walmart grocery store.
I'm not surprised at all. I mean, the price of beef has just gone through the roof over the past year or so. So, what was I going to say? What do you think of this war on the word recession? I mean, people are living through all this stuff, but the official propaganda in the world just seems to not want to label it as a recession. And even Paul Krugman, who was so wrong on inflation, is weighing his point in saying that the term recession no longer has any kind of meaning.
This is all part of Stagflate tax lie. This is a big part of the lie component. There's rules changes. There's hidden bailouts. They change definitions. They change formulas for inflation. They change formulas for GDP. They change formulas for the jobs and unemployment. This is very similar. And I spent a lot of time coming up with Stagflate tax lie, a lot of research, many, many years. Listened to a lot of experts, read a lot of books, studied financial history. A lot of it's based off of what the key economic or political leaders in the past said they did to steal, to lie, cheat, and steal from their own citizens with inflation and taxes. So history is unfortunately very brutal for the average person out there, especially as things get worse in the economy, because governments have a history of changing the rules, moving the goalposts. And then not only do they debase the currency, which create more currency units, which is inflation, increasing the money supply. But they also tend to, as the economy gets worse, and we're seeing the politicians discuss this now, although hopefully it's repealed once the Congress changes after the November 2022 elections, we're even talking about tax increases and more government spending.
Well, I mean, I think all the governments, from local governments all the way up to the federal government, are going to get squeezed as well, just like the consumer, because people just are not buying as much. So sales tax revenue has to be down for them. And then if real estate really starts to tank in terms of prices, that will also hurt the tax base. So, I mean, it's like a snowball. Everything kind of goes at the same time.
Exactly. And that's probably why I was talking about this with you before we started recording, probably why the Fed has distorted the yield curve. I mean, people say the Fed can only buy the front of the curve. I mean, the Fed can buy whatever bonds they want. At this point, the Fed's balance sheet is pure fiction. The Fed can legally move as of March of 2020, whatever they want off balance sheet into special purpose vehicles. My educated guess is the Fed has distorted the yield curve. I think you have the inversion, on the 2s and the 10s on the yield curve. I think I was talking with this about you before we start recording. I think the Fed has tried to play games with the 10-year U.S. Treasury to try to fool mortgage rates, because they realize that real estate could crash. And then if real estate does crash 6 to 9 months later, the states and the local governments, which are overly reliant on all these different tax revenues from home sales, from capital gains tax, property taxes, then things get really dicey, because most of these state and local governments, they don't keep a lot of cash on hand for a rainy day or for a recession or depression, and they do not run budget surpluses, which normally means when things go bad with government finances in 2008 or in 2020, the Federal Reserve Bank has to do quantitative easing.
You know, I listened to your Kevin Duffy interview, and there was so much good in there. And this is one of the things that he talked about, was how governments are going to be hurting. And pretty much they mess up everything in interviews, which we've seen over and over again. And it's not just the United States. It's every country in the world. And you just have to wonder if he's right that things will probably get so bad and it will force change in the world and people to kind of realize that the government can't do everything. But I think he's a little more optimistic on that point than I am. So, you know, the current market, I mean, we've had equities run up like crazy, even despite the Fed rate hike. Everything's pretty much gone up. Everything looks very overextended to me. I was reading that both Michael Burry and Warren Buffett have huge holdings in Apple. But the problem with reading that kind of stuff is there's a time delay on those holdings. So, I mean, so they may have sold it already. You know, it runs up and maybe they exited. Warren Buffett is probably a little bit less likely to do that than Burry, because I think Burry's a little bit more of a hedge fund trader kind of guy. But what do you think of those? As I mean, Buffett, Apple's 41% of his investment.
Apple charges very high prices for a consumer that has declining consumer discretionary income. So you're hearing from companies in the conference calls, these are discretionary companies, whether it's Weber Grills, which just went public. They had bad timing going public. I think like the angel investors and the venture capitalists wanted to dump their investment onto retail shareholders. I think those shares are down over 50% in 6 months. That's Weber Grills. So that's a big ticket discretionary item with much higher costs to manufacture that. They said consumer traffic, consumer interest, sales have collapsed. So they're in jeopardy. Then you have companies like Bed Bath and Beyond. So all these discretionary companies, they're just getting absolutely hit. Actually, you brought up Kevin Duffy. I think that interview was great. He's an underrated hedge fund manager. He also has a paid newsletter for retail investors out there called the Coffee Can Portfolio. It's reasonably priced. He's one of the few hedge fund managers that's more down to earth and that actually cares with a good track record. But I was talking with him after the interview, and he actually said he was buying puts on Apple. So we'll see what happens. I mean, it's big ticket discretionary. Apple was raising their prices even before all of this crazy stagflation, the high stagflation that we have now. I mean, Apple, with their costs going up, supply chain problems in China, the chip shortage, I think Apple's going to have to raise their prices even higher. And unless you're very, very affluent, or you can write off the iPhone or a new MacBook Pro or something like that, unless you could write it off for your business, I don't see a lot of customers buying those things.
No, I think people are getting squeezed. I mean, if they're stealing spam.
Well, not everyone's stealing spam.
No, I know.
The rich people at the federal, the corrupt congressmen here in DC that are doing insider trading, that are front running, they don't care if your steak prices if the steak prices at your 5-star DC steakhouse go from $50 to $80, $90, $100. They don't care.
No, of course not.
They don't care about that. They don't care if gasoline, even though on the TV cameras, they go on TV and they say like all about Green New Deal, green energy investing. We hate fossil fuels. Meanwhile, around DC here, they're driving around their $150,000 gas guzzling SUV or $150,000 sports car that's not even a hybrid.
Jason, New York is exactly the same way. I mean, there are plenty of people who have certain bumper stickers on their car, but they're driving Audis and BMWs. So it's the same crowd.
Yeah, so they don't care then that gasoline or diesel is up astronomically. They don't care that the steaks, and even though they're going on TV and saying people shouldn't eat meat, you need to eat bugs. you need to eat bugs. Your pea now has too much protein in it and is destroying the environment. You can't eat any more bugs because Dr. Klaus and his group of James Bond villain billionaires who want to buy land at pennies on the dollar.
And they're having Kobe beef steak dinners. So
and expensive sushi from the tuna that's almost extinct. Yes, exactly. I'm sure.
The world of hypocrisy never ends.
Well, these people, I actually wanted to touch on this. Like, there's just more scandals out about Nancy Pelosi and her husband with the NVIDIA deal. That's the latest scandal. But there was actually like another group of politicians about insider trading with the Sprint and T-Mobile. Like that politician, probably because he was a Republican, they went after him, and he is, I think, paying huge fines and going to prison. But I'm sure there were other people involved. But actually, if you want to read the case details of that, it's like he was meeting with lobbyists. He was getting inside information at his country club, at the golf course. He was getting inside information ahead of time on a merger from like lobbyists and also regulators that were involved. And he was getting tipped off on that, and he put on the stock trades. So if you think that that is the exception, I want to tell you here in the DC metro area that that is the norm. So not only in New York City does that happen, it also happens in DC. That is the norm. So yeah, they caught one. Yeah, he was a Republican. Yeah, they got some of his other friends. Meanwhile, these other hedge fund managers that are buying off like government employees, paying for inside information at the FDA for drug approvals, like Stevie Cohen, who owns the New York Mets now. Mm-hmm. These guys are getting a slap on the wrist. No prison time for Stevie Cohen. He bought the Mets.
You're either in the club or you're not, Jason. That's basically what it comes down to.
Or it's which politicians you bought. If you're smart, I mean, if you're already rich, you have to have protection. You have to buy protection.
Well, that's how you're in the club. You buy your way in.
Well, didn't Nancy Pelosi's husband say that like them doing their stock trades is free market and a good example of capitalism? And I was just laughing at that. Like, oh, you're using your top secret security clearance information to make stock trades so you can make an extra 7 or 8, I think 8 figures. Because the Pelosi's were probably only making about 7 figures years ago on their side stuff. Now they're making like 8 or 9 figures.
Well, I think there's a reason why congressmen become wealthy being congressmen, and it certainly is not on their salary.
So there's actually a really good book that came out about that, but it was bashed. God, I forgot the guy's name. It's Peter. They bashed him because he was a Republican. So like everyone, he actually goes through Democrats and Republicans in the book. I don't have the book. This is offhand, so I wasn't planning on discussing this. I'll put a link. I'll look for the book. I've talked about it in the past. He goes through details of financial disclosures for Republicans and Democrats. The reviews on the book are bad because the Democrats say that the book was one-sided, but if you actually look at the book, he goes through both parties. Unfortunately, like, that's just how it is. If you tell the truth here in DC, you are blacklisted, or they threaten to prosecute you with prison time. So,
of course, no doubt about it. I mean, I think it's becoming more and more obvious to people too. You know, we're no longer in a world where you just have ABC, NBC, CBS, and Fox, and an occasional newspaper for your information. I mean, that's one big benefit, I think, of the web. The information that you get or can find, it's basically mind-boggling. And, you know, they try and label it as, you know, fake news or whatever, but it's there. You can verify it yourself. Just go look.
And there's so much news coming out about DC corruption, Federal Reserve Bank corruption, market manipulation, and gold and silver. The mainstream media is not covering it. The mainstream financial media. Well, I heard this directly from CNBC employees, they're not allowed to criticize their sponsors. So if you're at CNBC and you're at Bloomberg News, you are not allowed to criticize Big Pharma, which spends an enormous amount for advertising, or for the wealth management companies, or for the large banks. So you're not allowed to. And this is actually, I think I told you this a while ago, Lee, this is actually how Zero Hedge initially started in 2008 as a blog. I know one of the initial guys. It was not the ones that are being talked about in headlines, like these hedge fund guys that bought it and are funding it. It was initially like very angry and frustrated, like assistant producers at CNBC and Bloomberg News, who were tired of all these stories and information just getting killed by the higher ups. So like their producers or directors and the sponsors telling them that they can't run any bad stories about the large banks, about the mortgage-backed securities and the credit default swaps, all this crap that the banks were creating. They had all the stories on this.
Yes.
The assistant producers had done all the research work. So then as a team, and these guys are not working in the corporate media anymore, but they're frustrated. So they anonymously created this blog, Zero Hedge. And then they created the Tyler Durden name. And there was like a team of these guys writing under that to protect themselves.
Very, very interesting. I did not know that little tidbit on Zero Hedge's history, but
I don't have the guy's permission. I don't have the guy's permission to name his name publicly, but
no, you don't need to.
He's probably going to be listening to this podcast, so hat tip. You know who you are.
And thank you very much for doing what you've done, because it's a great site. So
let's talk about commodities, and because the policies that are coming out for commodities or market manipulation or things we're hearing about commodities. Yes, commodities have had a big correction or crash the last couple of months. A lot of it was fear of the Fed rate hikes, the dollar rally, potential demand destruction. But I just see more and more problems in the food and energy space. And then the metals problems 2, 3, 4 years from now, the metals problems are going to be coming back.
Yeah, no doubt about it.
So why don't you talk about some of the main news story that really pissed me off the most was Justin Trudeau there. And he's now going to ban Canadian fertilizer exports, which is absolutely ridiculous.
Well, it was done in Sri Lanka, and it's been done in the Netherlands, and there have been protests there. It's basically destroyed the Sri Lankan economy. It's going to have a severe impact on Canada as well.
And then the news stories, to add to that, the news stories we're seeing come out, and Wall Street Silver is tweeting these out, and other people. But in Eastern Europe, we're just having enormous crop failures. So some of that is either bad weather, drought, too much rain, heat. But the other part of it, and I found this out after speaking to farmers who reached out to me in the US and other countries after I interviewed Doomberg for the first time 4 months ago, was that they skipped a planting season because fertilizer prices were too high. So crop yields were down, total crops were down, because a lot of these farmers said fertilizer prices are too high. I'm skipping a planting season. I'm going to wait for fertilizer to come down, and then I'm going to go buy fertilizer, and then I'm going to go plant. So I think over the next 6 months, 6 to 8 months, I think you're going to see that in a lot of areas of the world. These farmers were waiting for fertilizer prices to come down. They're waiting for a correction. And now that we have a correction in fertilizer stocks, you're going to see farmers order for new planting season, the fertilizer, and start to plant again.
I think we're in for some rough times when it comes to food. It's a very difficult business to make money farming. Margins are very thin. It's always been that way. It's a hard life. Obviously, there's a lot more big conglomerate like agribusiness running farms today. And actually, Bill Gates is apparently the largest farmland owner in the country right now. So,
and if you speak to the Netherlands farmers, they're saying that like Dr. Klaus, the World Economic Forum, his group of James Bond villain billionaires are all trying to buy their farmland for pennies on the dollar.
Of course. I mean, it's, well, I guess it's part of that great reset that they talk about. And it's just a way for them to get more assets.
Well, I think with
control.
Well, one thing I don't think you can argue it at this point, and I've talked about this for many months, we have on these shows, is the intentionally bad policy for food and energy, and they just keep piling onto it. And then you have crop
just
failures.
Like you mentioned with Trudeau and this nitrogen.
But the policies just keep piling on. So you just have more and more bad policies. You have all these problems in natural gas. There's still the diesel problem globally. So you have a diesel problem. You have sky high natural gas prices in Europe and Asia. This means sky high fertilizer prices because natural gas is a key component to making fertilizer.
Yeah, and then just imagine if you're a farmer, you own like a smaller mid-sized farm somewhere in the country, say like Indiana or whatever. You're not only faced with fertilizer costs have gone through the roof, but you also have the diesel issues, and then you have the supply chain issues on top of that. So you can't get parts for your tractor and everything else. So are you really going to put in the same effort? And then what's the impact down the road for the average consumer who relies on that farmer to produce their meals? It's pretty scary, actually.
And then you have politicians trying to vilify the farmers for trying to raise the prices. We're just not like producing enough.
Owners, right? Just like the gas station owners that they were vilifying.
Well, this is why I think we're still going to have really bad supply side problems in commodities. Even though we had very high commodity prices for the last 2 years until the recent correction or crash the last couple months, there was very little new supply that was actually brought online.
I know I've said this before, but there's always this like debate. Are we facing inflation or deflation? I think we're going to face both. I think we're going to see some severe asset deflation, not only in equity markets, but real estate and anything else that was part of the everything bubble. And we're going to see inflation in more necessities that are just harder to produce and get to the consumer. And, you know, that is gold, oil, just raw commodities that feed all of that.
And that is the worst case scenario for the Federal Reserve Bank and these other central banks, because the Fed for decades, it was official policy, the wealth effect, asset price inflation via the Cantillon effect. The Fed does not have good options. So the Fed did increase interest rates, 75 basis points, so 3/4 point hikes. But the Fed cannot keep increasing interest rates for a bunch of different reasons. One is basic math, the interest payments on the national debt. But the other, if they keep increasing interest rates, they're going to crash real estate. They're going to crash junk bonds. They're going to make states and local governments insolvent. They're going to exacerbate the recession. And then the Fed's going to have to bail out state and local governments 6 to 9 months afterwards when the tax revenues collapse. So the Fed does not, my point here, the Fed does not have any good options left because the policies for so long were so bad, and they could have increased interest rates in the past years ago. They did try to increase interest rates, from 2016, I think when Trump first won the election. So 2017, 2018, they were doing some interest rate increases. But then because the system is way over leveraged on all these trades, the global financial system is basically a global debt Ponzi scheme with over 300 trillion. So the more the Federal Reserve Bank increases interest rates, that strengthens the dollar. And then all this dollar denominated debt that was taken out, that becomes a problem. Then there's global margin calls in emerging market countries. So it starts to create a problem. You said this, we might have some deflation. The system, the way it is designed post 2008, because my opinion, in 2008, everything collapsed. The Fed did unbelievable amounts of trillions in secret bailouts to bail out the European Union, large European banks, foreign governments, foreign investment banks, foreign central banks, foreign corporations. The system cannot handle deflation for long periods of time now because of the total amount of debt and the dollars outstanding. It's the system is broken, and yet it's continued just at insane growth in debt since 2008.
I mean, this story goes back a long time, but I don't know if you have the same perspective as I do, but everything looks like it's endgame now. And
well, we need a new system. We need a new system. But the question then is, what's going to be the new system? It seems that a lot of these central banks now, it looks like tonight we're recording this we're recording this episode, which is episode number 6 of Finance Unspun on Sunday night, July 31st, 2022. I think the Japanese just said they don't want, and they're going to block a Bank of Japan's central bank digital currency. But that seems to be the plan for a lot of these governments and central banks, where they can't get like a one world currency. They're going to go to like blocks of central bank digital currencies first. We'll see. The citizenry is starting to wake up, though. I'm seeing more and more people who were not aware of this a couple of years ago. A lot of people are waking up to what is planned here with the food and energy problems and governments trying to take more control with central bank digital currencies.
I think there's no doubt that more and more people are starting to realize that something really wrong is going on, and they're starting to look into it, and they're starting to discover things that shock them.
Well, as we wrap up the show here, Lee, a couple more topics, just gold and silver. So gold prices did go down enormously before the rate hikes, but actually once the rate hikes were announced, gold rallied. Silver was in a lot of jeopardy at $18.60, the paper silver price here in the US. That was threatening a lot of the higher cost primary silver miners. I mean, if silver had gone another $1 or $2 lower, you were looking at a lot of these primary silver miners running at $2 or $3 an ounce losses per ounce of production. I mean, it was going to get very ugly.
And so you can't stay in business doing that.
Well, the commitment of traders was super bearish. So it was one-sided. There was nothing but selling for the last 3 or 4 weeks for gold, silver, and copper. So it looks like a lot of people were betting on the Fed rate hike, smashing the prices further. But we just got a lot of information, and I think you have the exact numbers in front of you for the Chinese purchases via Hong Kong. I mean, there was, I think, a over 200% increase in a month for the amount of physical gold tonnage that came in through Hong Kong. And then I think year over year, it might have been a 300% spike for physical gold demand. So the Chinese, the affluent Chinese, were buying this gold price dip when the gold price did get fairly low before the rate hikes. But the gold price, and especially silver with the short covering rally, has responded very well to these rate hikes.
I think it's funny that governments are buying precious metals. They're pushing digital currencies and they're buying precious metals. It's really kind of comical.
Well, they're protecting their own finances, themselves, for whatever the next system is. They're protecting their reserves because they know there's problems with the dollar. So they don't want to be holding, they know they have dollar denominated debt. They know they need dollars to go and import oil or go and import food. I mean, if Sri Lanka or some of these emerging market countries, and Lee, there's even more protests. On our last show, we were covering some of the protests. I think there's even more protests now. There was a larger one in Panama. I think Argentina, there's another enormous protests over increases, inflation in higher food and energy. The government's not giving poor people enough welfare payments or subsidies. So these governments, I bet they wish they had more dollars, because then they could go and pay a higher price to go and import diesel, to go and import oil, to go and import staple crops, but they don't have the dollars that's needed.
No, and I mean, let's face it. In the world of kings and heads of governments, gold really will buy pretty much anything.
For governments, it's important. If you look at systems, global economic systems collapsing either before Bretton Woods or after Bretton Woods, and the U.S. when they closed the gold window, I mean, a lot of these countries saw problems with the U.S., saw problems with England, whatever country was controlling the majority of the world economy, and they would start to buy gold. They would start to ask for more.
They were trading their dollars in for gold, and that's what forced them to close the gold window here.
Yeah, so gold is still a good hedge against the dollar. Problems with the dollar. If you don't like the U.S. government's policies, don't buy U.S. treasuries. Don't hold a lot of U.S. dollars long term. Now, if there's going to be a market crash, another stock market crash, then you do want some cash in the short term to go for opportunities if some of these good stocks do go on sale.
You know, I think that we're already seeing a good sale in a lot of areas. And I think Duffy had such a great example with Skechers versus Nike. There are companies out there that they're not in major indexes. They haven't been subject to that phenomena where they just go up as people buy index funds and everything is computer traded. So there are values out there, but you really need to know what you're doing. You really need to look. And if you can't, you should find a good manager, I think, of a fund.
It's too bad, Lee, that we cannot get silver at very low premiums closer to spot price, because the gold to silver ratio earlier this week, it hit the worst gold to silver ratio since 1990.
Yeah, it's a long time ago. So I've been buying precious metals for quite some time, and I bought this last dip. I got it around 18 something. So I just saw it bottoming, and to me, it's looking like it's bottomed, and we're going to see nothing but much higher prices in the next couple of years. So it'll be interesting. It just has to hold the lows that it just put in.
And did you see that Zimbabwe is, for the first time, I think in a very long time, they're actually going to create, their mint is actually going to make gold coins and make gold legal tender. Now, I think one gold coin in Zimbabwe is equivalent of an entire month's salary, but I guess it's a good first start.
Oh, absolutely. I mean, even in the States now, I mean, gold at its current price, I mean, it's not chump change. I mean, even if it was $1,600 an ounce, it's not like 35 back in the day.
And over the next 6 to 9 months, my educated guess, gold and silver will bottom, and then the new bull market will start when I suspect in the coming months, coming quarters, next quarter or two, when people finally admit the Fed has no more good options left, to where if they keep increasing interest rates, they're going to crash asset prices more, they're going to crash their whole economy, and then they're going to have to do bailouts for state and local governments, and tax revenues, federal government tax revenues will also collapse, which historically post-2008 means the Fed restarts quantitative easing. Because if government finances, that's one of the main things for the Fed's real mandates, is making sure government is funded.
Do you foresee a time where the financial mainstream media is actually bullish on gold and silver and don't make fun of people who invest in that in the sector?
So they occasionally do bring on gold bulls, but they're normal, like Wall Street futures traders, guys who trade on the trading floor. It's not people like Peter Schiff. Right. I believe he's been banned from CNBC. Peter Schiff doesn't even like admitting that gold and silver are manipulated, despite all the evidence we're seeing come out of the case in Chicago. I think they're closing up the arguments here. I think the closing arguments were this last couple of days before the weekend.
Well, you look at the price of gold and silver, and as an asset class, it's done phenomenally well since the 1990s, and it's just been completely ignored. I bought my first ounce of gold when it was like $350 an ounce. I mean, it's just been completely ignored. It's unbelievable to me.
And I bought my first shares of Wheaton Precious Metals when it was silver Wheaton at $11 or $12. So I think at one point it got to $40 or $50 a share until silver corrected. So, and it was paying dividends. So, I mean, there are opportunities there. It's timing. It's buying when there's blood in the streets and timing.
Mm-hmm. Absolutely. When people start saying it's the end of the world with any kind of asset, that's probably the time to buy.
And I think there's just tons of negative sentiment. And I think there's tons of negative sentiment for commodities, for a lot of these larger fertilizer companies that are still having good free cash flow. There's very negative sentiment for gold miners like Newmont Mining and Agnico Eagle. Those are the larger senior producers. I mean, the free cash flow for Agnico Eagle is still pretty solid. They're still paying a dividend. Their costs did not increase as much as Newmont's did. We're going to get more information from the other larger and medium-sized gold and silver miners in the next couple of weeks for the Q2 earnings. I think only a couple of the larger ones just announced so far. We haven't gotten Pan American Silver yet, but we're going to get more cost information. I mean, if metals prices go down, energy prices are still high. So I think the major theme, and it's not going away, that the trend that people can play is still energy. I mean, I talked about this in a podcast for my patrons in the last week or two, that Germany and China were panic buying coal. They're using wood there. So, I mean, the energy crisis, they're still importing mass amounts of natural gas. France has problems with their nuclear power plants. So the food, and as long as there's energy problems, Lee, and fertilizer problems, there's going to be food problems.
Didn't Russia just cut Latvia off?
I don't know all the details. I haven't paid attention. I mean, the main things I saw out of Eastern Europe, there's a lot of protests there over higher costs, energy, food, electricity. And then there's also the crop failures. I think out of Romania and other parts of Eastern Europe, there was a surprising, I think 40% of their wheat crop in Romania, and then another crop failure, just like very unexpectedly bad harvests. So this is just exacerbating a food and energy crisis. And there's a lack of investment. And that's the problem with the supply side, bad government policy. And then to bring on a new mine, to bring on a large oil and gas production, it takes enormous amount of capital investment. And if politicians are going to put bad policies or vilify the people in the commodities industry for trying to keep their business afloat, to make a profit, the supply side problems, especially food and energy, are just going to get worse.
Oh, I agree. Well, Jason, is there anything else you wanted to talk about?
No, I think that's it for this episode. And again, this is episode number 6 of Finance Unspun. Thanks for listening.